In the most recent March FOMC meeting, Jerome Powell stated Federal Reserve is looking into slowing down the pace of quantitative tightening, or QT, meaning that even though they're not making any changes right now, but they're looking to slow it down, the pace of the pace that the Federal Reserve is decreasing its balance sheet. So this underscores the Federal Reserve's intention to continue reducing its balance sheet, but at a more controlled manner to avoid the liquidity crisis happened in 2019. So since the end of the QE cycle, somewhere in 2022 April, Federal Reserve has shrunk its balance sheet by $1.43 trillion through quantitative tightening. And this chart is a chart of the Federal Reserve balance sheet. Jerome Powell did explain his rationale behind us thinking about slowing down QT in the future. They're trying to come up with a more gradual approach, so eventually they're hoping to be able to eventually get rid of more assets. So meaning that if we keep the same pace of the QT, maybe $1 trillion later, we get into a recession, there's a liquidity issue, and they're forced to reverse its course. But if they're hoping they're slowing down the QT pace to half of the current speed, eventually they're able to maybe get rid of $2 trillion before having to reverse the course. So this chart shows us the total asset of the balance sheet of Federal Reserve since 2008. Right? So in 2008, we see the financial crisis, they start pumping money in. But what's interesting is 2019 over here, what happened is when they did the previous QT in 2018, in 2019, there's a liquidity crunch. There's a liquidity issue forcing Federal Reserve to reverse course back into QE again. That's why the amount of asset increased in 2019. To fix that liquidity issue. So to avoid that from happening again, they're actually trying to watch the reserve balance. So this chart here is not the total balance sheet, but the reserve balance. Reserve balance is total amount of money the U.S. institutions and banks, they put in their savings account in Federal Reserve. So reserve balance, even though it is money, but the banks or institutions cannot use that money for daily activities. It's only there sitting in the Federal Reserve in case of emergency, such as a liquidity issue. But what's very interesting is if we look back to this chart, right, the balance sheet chart, you see in 2015 to 2018, the Federal Reserve balance sheet did not move, right? There's no QE, nor there's any QT. So they stay at the constant level. So what happened in that period, right? It's in this blue square over here. Even when they're not buying or selling assets, the reserve balance was shrinking a little bit. And then when 2018, 2019, when they did the QT, right, they start shrinking their balance sheet, the reserve balance seeing a continuation of decrease, and then eventually causing a repo market issue, forcing them to reverse course. So this chart is very interesting. So apparently Federal Reserve is watching this chart, right? Making sure that there is enough reserve balance in the Federal Reserve savings account for the banks so that we don't see the liquidity crunch happening again. So where we are is we are here. So we just have to make sure it doesn't do like a crazy downward trending like what happened a couple of years ago, right? But even though it seems like we're at a level higher than maybe 2018, but the problem is it's been many years of inflation. So the value of money actually decreased in the past couple of years. So that's one thing to be considered. But on the other hand, we see this person, Bostic, who is the president of Atlanta Fed. After the March FOMC meeting, this person came out to talk about his ideology towards interest rate cut. So his recent comment was he think in 2024 there will be only a single 25 basis point cut instead of what he said before, which is 2 cuts, right? So I only think 1 cut for 2024. But if we look at March FOMC meeting dot plot, we can see that the median dot plot is showing that there will be 3 cuts this year for 2024. So Bostic thinking that there will be 1 cut, so Bostic will be here. This dot, one of the dot here will be Bostic. So Bostic used to be a pretty dovish guy, well, but now he's more starting to sound more and more like a hawk, right? So, but anyways, the purpose of him saying that only 1 interest rate cut is that he tried to emphasize the importance of controlling the inflation and aiming for the 2% whatever objective the Federal Reserve has set. But if we look at the market expectation through the use of Fed funds futures market, the top chart is old, right, from February 18th, and the bottom chart March 24th from today. We can see that back in February 18th, market was expecting 4 cuts this year, and now market is expecting only 3 cuts. Just to give you some background, in the beginning of this year, the market was expecting 6 cuts, right? So now it's down to 3 cuts, meaning that the economy has been pretty hot since the beginning of the year, right? So as a conclusion of this video, I think the Federal Reserve policy room is again very tight, right? On one hand, they're trying to avoid liquidity crunch in 2019, so they try to ease off on or they're thinking about easing off on the QT. On the other hand, right, the economy is kind of hot. We're still kind of not really far away, but we're still certain distance away from the 2% inflation target, right? So they're having they're kind of walking on a tightrope here. So because of the policy room being so small, there is definitely a risk associated with this, right? So the investor should stay informed, stay diversified, and be prepared for volatility in the future.